Today, folks, Meta has been one of the largest investments between my fiance and I going all the way back to since the pandemic. In fact, it's probably one of the longest standing stocks that has ever maintained a position, an individual stock position between our accounts. Obviously, we've done some adjustments over the year because it did balloon to being way too big of a position, but it is still over 6% of our combined accounts. And I am very grateful to still have a position as it is my number one stock pick next to Google. And you guys are well aware of this, but I want to talk about why it remains such an incredible position. And it's really just two growth theses that I have right now. One is on glasses and the other is going to be on Threads, which is like the most under-discussed platform that is almost the size of X now. And I can't really wrap my head around how that's happened and why no one's discussing it. But if you're on a path to financial independence, if one day you like to retire early, you love diving into individual stocks, go hit the subscribe button, folks, because the Meta glasses, I think, are building a new category of technology, and I think Meta's finally cracked it. You can see the background here. I'm somebody that uses VR religiously, but VR in and of itself is really only great for gaming. It's a very small category that is not profitable for Meta, but I'm starting to think that they finally reached their goal of merging technology into glasses, augmented reality in a way that no other company's done successfully yet. And I think it's going to have staying power, and it already has built out some branded staying power. And I'm seeing this with some old school YouTubers. If you're into nostalgia, let's go back to Casey Neistat here. This is such a fascinating look into where we're at right now. So just take a listen to this tidbit of advice.
I think this is the future interface for all computing. The future interface for all computing. Similarly, when the first Meta Ray-Bans came out, I made a review video of those, and my takeaway was, well, the footage kind of sucks. The future of computing, and these kind of sucked. Since making those proclamations, these have lived in a cabinet in my apartment with all of the other tech that I never, ever use. And I think I bought 3 more pair of these. I bought a new pair last week. I use them all the time.
I mean, I wear these Meta Ray-Bans pretty frequently. I mean, almost every weekend I wear these out with my kid.
And this reveals what I think is going to be the biggest X factor in...
Yeah, I want to talk about this a little bit more in depthly, right? Because I think people need to understand the reason that I like these companies so much is the base valuations on their underlying core businesses. I mean, these companies are now the place of commerce. I mean, all brick and mortar has to upgrade to e-commerce at some point. And if you haven't already, you're so far behind and you're going to have to upgrade regardless, because this is the medium of conversation today with family, friends, whether you're utilizing WhatsApp, you're on Facebook, you're using Marketplace. I mean, the ecosystem that Meta has built out, the foundation of that, I still think hasn't unlocked its true value, but it's what's driving the growth. And then we get these cherries on top of the cake, very similar to Google, right? Like Google's core businesses are astonishing and growing still at exceptional rates. But then you get these cherries, right? Like I don't think people have truly recognized that. I don't think these Ray-Ban AI glasses are going to replace Apple's iPhone, but I think it is going to be a new category of device options that is going to balloon. I think it's a huge category for a lot of people that they're gonna buy it, they're gonna utilize it, and it's very reasonably priced. And look at the growth rate. I mean, 21%. I mean, you're talking about companies that are buying shares back. If you take a look at margins, which is something I've talked about quite excessively with Google, is these companies are starting to rebuild back record levels of margin. Net margin for Meta is 40%. There aren't any other companies on the planet that really come close to these exceptional level of margins. If you look at the price ratios, and we zoom in a little bit, these are some of the lowest levels these companies have traded at through their historical history. I mean, it's not uncommon for Meta to be trading at a 30 times multiple, and its earnings per share growth right now, might I add, with these margin expansions here, let me just see if I can find it here. What we want, revenue and profit, and we want that earnings per share growth, guys. The company is seeing almost 40%, 30 to 40% earnings per share growth, some of the greatest growth the company's ever experienced in its lifetime. Yet it's trading at a price to earning multiple that is lower than its historical averages. I don't know how people don't recognize that for what it is, let alone if you take a look at like Threads, right? Let's talk about how hard, firstly, it is to disrupt these platforms. Like no one's making new social media platforms. No matter how you want to think, it's a fun idea to be like, oh, I'd love to make a social media platform, but you're not going to compete with TikTok. You're not going to compete with Facebook or Instagram. And let's be real, go on your watch time on your iPhone and tell me what apps are you spending the most time on, because those are the companies that are getting the benefit. And what's insane is there's been a reported 400 million monthly users, but where's the culture? This is a really interesting article that I'm trying to wrap my head around. But this month, Threads announced that it reached 400 million monthly active users, nearly as many as X. Threads is the Big Bang Theory of social media. Bland, boring, largely unoffensive, and somehow it was the most popular show on television for years. Game of Thrones got the culture and critical attention, but Old Sheldon retained a steady audience of nearly the same size. At any given time, Twitter and X are searched somewhere between 12 to 30 times more than Threads on Google, according to search engines trends data. Threads is a popular platform without much of an identity, and maybe that's a good thing. X's culture relevance is inseparable from the constant churn of Elon Musk's drama, just like how Game of Thrones culture legacy is forever tied to the spectacularly bad season finale, right? This is such a funny crossover because, you read more into this and you got to recognize, right, that I think more people are actually leaving X than maybe joining X. I think I'm somebody that hardly ever uses X. People that I know using it are tired of it because of the drama. There's major YouTubers with the onslaught of the political landscape in the United States that don't even want to go to social events anymore, and they can't stand Twitter because of, or X, because of the toxic nature behind it. And I think the clean-cut nature of Threads is a new opportunity for a lot of these creators, but it's just so largely under discussed. And despite Threads' connections to Meta's universe of social media platforms, it is relatively a new app. And after speaking with the few Threads power users, I'm convinced its newness and ever slow rollout of features is where its success lies. This is far from X, which is in a constant state of change and seems to be hemorrhaging users. So fascinatingly enough here, right? Like X has 600 million users. Here's a platform that came out of nowhere, doesn't cost nearly as much as Elon spent on X, and is now crushing it, being one of the dominated social media platforms out there, right? So, and if you look on the top downloaded apps, guys, this is why my biggest investment theses are built off Google, because Gemini is the most downloaded AI tool, and Threads is at number 5. And then you got Microsoft Authenticator and Teams. Like, these have been the top free downloaded apps for quite some time now, and I think you have to like build out an investment thesis around this. The market is just not recognizing these companies, and they don't deserve 26 times multiples, in my opinion. I get that they're looked at as advertiser players, and if we go into a recession, advertising can get cut, but that doesn't change the underlying moat that these businesses have, that they are the level of conversation, commerce, and how we live our daily lives today. They literally are the new brick and mortar of reality. And people just don't want to give it the same multiple that Apple or Microsoft have, right? Like, how is Apple that it can't even grow nearly as, look at Apple's at a 40 PE today, guys. If we just go take a look at the revenue and macro trends real quick, and I just want to show you the comparables. Let's just look at EPS, forget everything else. Let's go look at earnings per share growth. Their earnings per share growth is in the single digits, and yet it trades. You got Meta at 26 and Apple at a 40. And I'm just like, man, what am I doing with my life? I'm just like, I need to own more of this. Like, I got to stop myself because I don't want to like over leverage into these stocks. And I've told you, like, Meta and Google as of today, between my fiance and I, our combined accounts, 15% of our total portfolios sit within these two stocks. They are the largest positions in our portfolios for a very good reason. And I scaled them down because they were 20%. I pulled them down a bit, but now I'm thinking maybe they should still be 20%. I don't know. I'll pass the question off to you. I'd love to know what you think about this in that comment section below.